Good morning, everyone. You are watching a live daily market outlook for Monday, 6th of June 2012, prepared by Windsor Brokers. Some positive tone, especially for the single currency and the gold, that was established last Friday, still holds base and looks for a possible further corrective action, especially when we are talking about euro that came close to the yearly lows, as well as sterling, while gold bounced off the critical 1620 support zone and regained some important levels. That gives some more positive sentiment currently and for today, actually. So we will see how the markets will react. Overall tone for a single currency, however, remains firmly bearish, as the larger picture shows the pair in a free fall that was fueled by current crisis in the Eurozone with Greece and, of course, the Spain that came the last, putting some more petrol in the already big fire of crisis. On the top of this last Friday's jobs data from United States that came in very disappointing levels, despite quite optimistic forecasts, with 150,000 in average being forecasted, and our forecast was around 130,000. Disappointing 69,000 of new jobs was released, raising the big question now of U.S. economy's further growth and recovery, as some indicators released earlier were giving some more optimistic tone. However, with the latest very significant release of U.S. jobs data, increasing fears again of the further slowdown. This was also pushed by negative Chinese factories data released during the past week, giving the basically overall picture of the world economies, making the overall picture of the world economies, quite gloomy, and increasing fears of the possible further increase of the current crisis. The best indicator for this is the oil that is basically in the free fall and shows no signs of attempting to build any short-term base, despite quite negative technicals, as the fears for the further slowdown of the world economies that might, of course, trigger reduced demand for the energies, keep the investors quite cautious at this point. Some action was seen from the Eurozone officials as they are looking for step towards so-called fiscal union. When Jean-Claude Trichet called last June for the creation of a European finance ministry with the power over national budgets, the idea seemed fanciful, a distant dream that would take years or even decades to realize, if it ever come to be. 1 year later, with the Eurozone's debt crisis threatening to tear the bloc apart, Germany is pushing its partners for precisely the kind of a giant leap forward in fiscal integration that the now departed European Central Bank President had in mind. After falling short with her fiscal compact on budget discipline, German Chancellor Angela Merkel is pressing for much more ambitious measures, including a central authority to manage euro area finances and major new powers for the European Commission, European Parliament, and European Court of Justice. She is also seeking a coordinated European approach to reforming labour markets, social security systems, and tax policies. Until states agree to these steps and the unprecedented loss of sovereignty they involve, the officials say Berlin will refuse to consider other initiatives like joint Eurozone bonds or a banking union with cross-border deposit guarantees. Steps Berlin say could not only come in a second wave. If you recall, we used to talk about this some time ago, and I said that basically as long as there is no central control of finances of each member of the Eurozone, as this is a monetary union, nothing much will be seen as countries control their finances on their own and do whatever basically they want. And this was the best example was Greece, that could not stand the current situation, as they were taking loans and loans, and currently they're just paying interest on interest. The similar thing is with Spain and also Italy, that has around 1,900 billion euros debt. So basically, I would say that quite good idea came from Germany, as Germany is also the main paymaster of the Eurozone, and everything basically depends on them. If this idea will be working and will find support within the Eurozone members, then could be quite a good solution to come out of the current crisis, as so far any solution was found despite heavy talks and negotiations, as most of the European countries are not willing to give any part of their sovereignty over the country or finances or whatever. So basically it shows that Eurozone as it is sinking lower. As we mentioned also last Friday comments, that Eurozone is falling apart now, and it's a matter of time when Greece, as the first candidate, will be leaving the zone. These steps of German Chancellor are seen as a desperate movement, but from the other side, it's a very good idea, and basically the only thing that could prevent disastrous scenario of dissolving the Euro bloc and the other consequences that would come as a result of this. So we'll take a look. We'll see in the days to come what will be the final outcome. I would say that I'm not very optimistic, knowing the previous meetings and the results of attempts of especially Germany to establish some workable model for whole Eurozone. I would say that I'm not very optimistic in this case, but of course time will show how the things will be developing. Brief look to today's calendar. Quite a small number of releases, as it's Monday. Some news already came from Australia. Inflation goes for May. It's at unchanged at 0.0% compared to previous 0.3%. Job advertisement in Australia came a bit better than the previous minus 3.1 at minus 2.4. While gross operating profits of the companies quarterly showed some improvement, still negative, minus 4 compared to minus 6.5% of the release of the fourth quarter of 2011. From Eurozone, Centix investors' confidence for June is due at 8:30 GMT, and it's expected to further dip to minus 29. That is today's forecast, compared to minus 24.5 of the release of month of May. And Eurozone produce price index for April is forecasted slightly to decrease 0.2% compared to 0.5% of March's release. From US single release at 1400 GMT factory orders for April, improvement by 0.3% compared to minus 1.9% seen in the March's release. And now we're going to take a look in the markets and see the latest movements of major currencies and commodities after last Friday's strong market movements. As said, the euro is okay. The euro is in the near-term recovery mode after last Friday's pre-data release dip seen to 122.87. This is the fresh 23-month low. The prices last time seen in July 2010, and the sharp rally higher after the release of US data supported the single currency that peaked at 124.54. Level also marking 50% retracement of the down leg from 126.23 down to 122.87, as the overnight price action that dipped to 123.87 was still contained by 20 days exponential moving average, and the same one is attempting to cross above hourly 55 days one. There is still possibility, as studies still hold in the positive territory. There is still a technical possibility of further extension higher. Of course, we need to see the clearance of the initial barrier at 124.54 and the more significant 125 zone. That is the previous consolidation range floor. That will give some more credit for the single currency's short-term recovery and open way towards next significant barriers at 126 and 126.23, the peak of 28th of May. In case of break above this level, we'll be able to say that further recovery is quite likely. However, brief look at the larger picture, and the daily chart shows studies still all in the negative territory, but quite overextended conditions. See signal for some stronger recovery, yet no clear signal, as most of the studies are still in the negative movement and still pointing lower, but this could be quite a good signal. Otherwise, revisit of a yearly low at 120, otherwise further extension lower, and a test of our next downside targets that are still in focus on the larger picture, 121.50 and 120.00 would be quite a likely scenario, as still, despite quite overextended technicals, the single currency still doesn't show any stronger signals of any more significant recovery. So just to summarize, 124.54 offers the initial resistance ahead of 125, a break of which there is also the 55 days exponential moving average on the 4-hour chart as initial barrier here, and basically break above 125 would be good signal for some stronger recovery, as near-term technicals are still supportive and still see potential for some stronger recovery. However, the latest bounce was driven mainly by fundamentals, and the lack of any further supportive news might not be that supportive for the single currency. But once the technicals pick up the pace, then most likely sentiment will turn more positive, and they will drag more investors to go long on euro, actually to cut their profits on the shorts, and they're likely to open way for a stronger recovery of the single currency. The cable is also in the near-term corrective action after last Friday's dip to as low as 152.67, approached closely the yearly low at 152.33. That was our main target, as larger picture studies are still completely in the negative territory, and at their extreme points, yet no firm signal of any stronger recovery. On the lower time frames, as said, the bounce of 1.5267 reached 154.36. That marks exactly 38.2% retracement of the latest down leg from 157.15 to 152.67, with subsequent easing, finding support at around the 153.40 zone, with the following in narrow range consolidation at the zone at 153.60. As the hourly studies are still in a way pointing higher, there is still possibility of a fresh attempt higher, as 20 days exponential moving average holds the downside in the early hours of European session, with 55 days one at 154. That also marks the initial barrier and the round figure resistance seen first ahead of last Friday's peak at 154.36, break of which is basically recovered to signal some stronger retracement of the latest down leg with the levels to come 154.91, 50% retracement. Before this, there is a lower platform low at 154.60, 31st of May low, and then 154.91, 155.00, break above 155, 155.28 peak of 31st of May, as well as 155.44 that marks 61.8% retracement is basically required to trigger some stronger recovery. As said earlier, the negative tone that dominates on the larger picture still keeps the downside firmly in focus, and as long as I would say 155, 155.40 holds the upside capped, more likely scenario would be further extension lower and the revisit of yearly low at 152.33. The dollar yen is in a slight consolidative action after dipping as low as 77.65 on Friday's after Friday's release of data that pushed the dollar significantly lower, but a quick recovery followed, and the pair is currently consolidating around the 78 zone as near-term studies are still in the negative territory, and not much is expected to be seen as long as 78.64, our initial barrier last Friday's highs, keep the upside capped. Break above this and a more significant 79 level is required to ease the current bear pressure and allow for some stronger recovery action. However, the negative tone on the daily chart and break below 79 and 78.61 that marks 200 days moving average keeps the downside still very vulnerable, and the loss of 78 as the last reference dipped so far to 77.65 with this 77.36 and 77.00 seen as the next target that will threaten for a full retracement of the recent 76.00 to 84.17 recovery rally of the dollar yen. On the upside, as said, 78.60 and 79.00 are seen as a key and strong resistances, and only break above these levels would allow for some stronger recovery and prevent the pair from a further extension of the short-term downtrend from 84.17 yearly high posted on 15th of March that so far dipped to 77.65. The dollar Swiss is also in the corrective, near-term corrective mode after hitting a fresh high last Friday at 97.69. A brief break below initial support at 96.64, low of 31st of May, and a dip spike below 50% retracement at 96.50. So far seen 96.37, but a quick bounce higher, regained the zone at around 96.70, 80 levels. However, the moving averages are still holding above the price action, and this keeps pressure towards the downside. We need to see the break above 95, I would say, pardon, 97. That will be these highs of overnight the highs of the day so far, to allow some stronger recovery. However, the larger picture's positive tone remains fully in play, but overextended on the upside. Studies that already started pointing lower see risk of stronger corrective action for dollar Swiss, as it was in the very strong rally from 90.41 during the month of May, 1st of May's low. That peaked so far at 97.69 with the clearance of important levels at 96 and 97, accelerating gains towards 98.00. This is our next upside target. As said, failure to regain levels at 96, 90, 97 would be signal, as 4-hour chart studies are still pointing lower despite being in the positive territory. Increased risk of further weakness. Loss of last Friday's low at 96.37 will threaten 96.00, strong support. Previous high of 25th of May, as well as near 38.2% retracement of the up leg from 93.66 to 97.69. What is also the 55 days exponential moving average, and they basically break below this level would sideline immediate bulls and look for some stronger corrective action. Next, very significant supports lie at 95.27 near 61.8% retracement, and the 95.00 peak of 18th of May, loss of which would be a trigger for a further corrective action and test of a very significant support at 93.66, 21st of May, higher low. As said at the beginning, the gold was a top performer last Friday as it bounced from the critical support zone at 1530, 1520, regained some very important levels. The first one was 1583, 1600 as very strong barrier, also 50% retracement of the broader down move from 1671 down to 1526, and finally break above 61.8% retracement at 1616. Has so far extended gains to 1630. This was the peak seen at the late hours of the US session on last Friday. This is also above our next upside target that was at 1626, with the next with the focus higher now, looking for test of a 1647 high of 4th of May. A brief consolidative action is now underway. The pair is so far supported at 1614, and it's important to hold above 1600 as last Friday's close above 16 as also the round figure support and the psychological support keeps hopes of further recovery of the yellow metal and preventing it from further easing, as loss of critical 15, 20, 30 support would be signal of further stronger weakness of the yellow metal and the stronger reversal of the long term basically uptrend of approximately 10 years that was rallying from $300 per ounce and peaked at $19-20, approached magic barrier at $2,000 per ounce. As said, bounce higher in the regain of some important levels, and now keeps the focus, near-term focus at the upside, and it's, as said, important to hold above 1600 in order to keep the focus at the upside levels. 1700 would be ahead of previously mentioned levels at 1670. 1700 would be the next target, with the very significant barrier at 1671 peak of 1st of May, at top of the recent weakness and down leg that dipped from 1671 to as low as 1526. As a number of analysts commented the recent weakness of the dollar, and they were right. I pointed also that 1600 level would be preferred rather than 1500 for gold, as this would be quite optimistic, and the current deepening of the crisis reactivates gold as one of the main safe haven instruments, and investors are that showed actually after last Friday's release heavily jumping into the yellow metal to protect their investments, as the dollar is already in the red territory, and the current crisis that is the recent releases from US and China showing that most of the world's biggest economies are hit, and the deepening crisis are of course prompting investors into the more safe instruments, and the gold is one of the number of the top safe haven instruments where the investors usually run after during the crisis. And brief look at the crude oil that remains in a free fall of its latest lower top at 106.41, 1st of May low. So during basically 1 month, the oil price dropped from 106 to 81.50. So far, 81.49 was the low of this morning, and shows no signs of any basing so far, just continues to dip lower. Important level is seen at 80.00 as round figure support, loss of which pardon, will definitely open way for test of next very significant supports, lows of August and October 2011, 75, 70 and 74.94 would be the next targets, as crisis is deepening now worldwide, and that of course slow down in the major world economies signals further slowdown in the world oil demand. A likely scenario would be further extension lower. So far, according to the technicals, there is no much to be seen on the corrective action. Currently, this morning, the oil is bouncing, regains 82.00 as overextended hourly studies started to point higher, might signal some brief corrective action, but I would say nothing more significant unless 89 pardon, 89.00, 90.00 is regained, and basically break above 92 would give some more credibility into possible bounce higher. Until then, firm focus remains at the downside. I would like to thank you all for attending our session. We are back tomorrow morning at the same time at 7:00 GMT. The questions and answers session will follow after the end of the official one. Whoever missed any part of the session can find it in the YouTube. Our page is called the Windsor Brokers Forex, and this session will be shortly loaded there. I wish you a very nice day, very profitable trading, and hope to see you back tomorrow morning at the same time. Have a nice day.